Before we begin the video, we want to let you know this is not tax advice. This video is for educational and learning purposes only. Now, the important disclaimer is out of the way. Let's sit back for a while to see how last year ended.
The fact that the Indonesia's trajectory growth data from various institutions have become accessible is a fueling hope. Institutions include the World Bank, IMF, PwC, BCG, and government officials. All big players in the game predicted that Indonesia will be new economic powerhouse. Now, the question is no longer if Indonesia will grow its market, but when. Estimates range from 2024 to 2050, which is a huge gap. Thanks to the setbacks as a result of the pandemic, the business sector is playing a bit of catch-up. Regardless, many are seeing the huge potential in what's currently happening. There have been regular outcries for better infrastructure, better access, better know-how, and better environments over the years. Businesses need a certain level of digitalization, physical infrastructure, and solid supply chains. Economic society needs more access to key personnel, technical experts, and suppliers. Indonesia markets have also suffered from a lack of practical knowledge, an understanding of market expectations around custom and excise taxes, financial and record-keeping systems, manpower regulations, and requirements for permits and licenses. Finally, people want an improved working and social culture along with transparency and equal treatment. All of these needs have been exacerbated by the inevitable business climate in 2021. This is Guma Channel, and we're going to explore the most recent business challenge, Indonesia VAT increase. What to do next? With so much going on, it's no wonder that the government is poised to support change. New tax changes have the potential to streamline the state budget and to contribute to appropriate allocation, distribution, and stabilization. This will be a key element in providing much-needed support to corporate society, professionals, trade unions, and pressure groups that have been asking for these changes for a long time. Omnibus law and harmonized tax law were being the government's response. Of course, the pandemic has slowed a lot of progress. The government struggled to boost their available programs within these past years. The government has made concerted efforts to increase the tax ratio by implementing the tax amnesty program, improving tax offices' service, applying the automatic exchange of financial account information scheme, and boosting law enforcement. Sadly, those efforts were not enough to overcome the evolution and revolution of business, nor confront dynamic multi-sectoral globalization. Those efforts also failed to combat aggressive tax planning practices. In order to overcome the state budget deficit and increase the tax ratio, the government needs to adjust and group everything into one comprehensive law as their fiscal consolidation strategy. This includes laws and regulations for general provisions and taxation procedures, income tax, value-added tax, excise tax, carbon taxes, and the voluntary disclosure program. If implemented properly, this change has the potential to accelerate the economic recovery drastically. The new tax system could be carried out by, to name a few, implementing policies to increase tax revenue performance, expanding the tax base, reforming tax administration, increasing voluntary taxpayer compliance, and creating a structure that is more efficient. The harmonized tax law is a step forward in the right direction, positioning Indonesia's tax system for a major overhaul. This new law, which was ratified nearly a month after Indonesia's House of Representatives passed the Harmonized Taxation Bill on early October 2021. The question now is, what to do next? To understand the impact of the coming changes, it's important to look at the bigger picture from the macroeconomic approach. There will be significant impact on changes to indirect taxation. From a region point of view, the Indonesian indirect tax rate in the harmonized tax law will increase competition among ASEAN country members. Southeast Asian countries set a quite challenging yet competitive VAT rate to attract investors. The Institute for Development of Economics and Finance, or we can call it INDAF, also offered key studies to capture how the new tax law might change the macroeconomics lenses. In their online discussion of VAT changes implications within the Harmonized Taxation Bill, their studies were showing that income and public consumption might enter a downfall considering the consumer price index possibly rise. The VAT rate gradual hikes are predicted to disrupt the growth of certain industries like textile, F&B, tobacco, electrical equipment, and utilities, with negative sectoral output and employment rate. Though nobody likes change, now is the time to get familiar with the new programs and amendments so you can plan solutions for your business and take advantage of what's to come. One of the priorities is looking at the future of your business. Regulatory changes will have varying degrees of financial, commercial, and reputational effects. Don't delay in evaluating potential challenges in your book's bottom line. Look at your technology infrastructure, procedures, compliance costs, and margins. Measure the impact of the changes on cash flow, compliance processes, and resources. Evaluate the finance function. Complete a financial model to capture and assess every impact across the value chain. This way, your business will be more than ready to roll in the upcoming years without unnecessary surprises. We also already mentioned INDEF's study that predicting VAT rate increase impact towards sectoral output in certain industry. So, taking a deep dive into your business's commercial capacity is highly endorsed. How? You can start by reviewing your employees' workloads and compliance risks due to their potential for errors and the market, including customers and competitors. Continue by quantifying all changes to services and products related to how they're positioned in the market. You may find that some products or services are more or less competitive, while others are no longer viable. Next, review contract terms with suppliers and/or customers. Your tax team should lead this evaluation, ideally in collaboration with other affected teams like sales, procurement, and legal teams. Once you've evaluated each area and begun the necessary steps, plan for potential responses. Responses for all three impact areas should be reviewed together to uncover any overlap. The minute you've determined your response to regulatory change and how it will impact your business, it's time to craft newer and better strategies to manage it. Brace the impacts. Assemble a cross-functional team. The team's first task should be to develop a comprehensive project plan, outlining key deliverables, timelines, and milestones. Wait and see basically will not help you to run a seamless business. It is fair enough to take action after visualize the harmonized tax law impacts by actively manage VAT. Staying ahead of an ever-changing landscape is critical for compliance. Businesses must reassess their policies regularly in order to find better workflows. If an audit happens, how can it be smoother? Are data and contracts being stored correctly? Is there a point in the compliance chain that can be changed to help prevent future audits? As the part of your effort in managing VAT actively, effective uses of technology throughout the VAT lifecycle will also great to complement your strategy. In today's world, a business can't have visibility and properly manage its VAT compliance across multiple countries without using technology. Without technology, their level of compliance will never be where it should be. Companies that want to succeed need to have a central VAT function or outsource it. With your plan and cross-functional team in place, your next step is to decide how to communicate your plan to internal and external stakeholders, including tax authorities, staff members, and customers and suppliers. It is also best to schedule times to regularly update stakeholders as the project progresses. Finally, your team can execute the plan, and once completed, conduct a post-mortem evaluation. They should also continue to monitor responses and do follow-ups. Are not there yet? Think about outsourcing, co-sourcing, and insourcing. The challenge for many businesses is striking the perfect balance between outsourcing, co-sourcing, and insourcing. This ultimately comes down to individual needs and expectations. Businesses can't afford to delay remodeling their tax and finance functions if they want to be both compliant and a value-added partner. Most businesses will likely need to co-source some critical activities within the next 24 months so they can increase value, reduce risk, and decrease costs. Inevitable changes to VAT law could create liability issues for your company. This may affect the company's relationships with suppliers, employees, customers, and tax authorities. Provide a risk matrix. Realize that the possibility of non-compliance creates reputational costs. It's important to remember that taxes and laws are constantly evolving. There are pros and cons to every change, so the important thing to do is to create systems within your own business to prepare for the unknown. Reassess your standards regularly and create teams that can implement plans to keep your business compliant. By doing this, you can anticipate change before it happens and decide early the most efficient and effective ways to respond. And get involved with the people, institutions, and processes that drive and define regulatory change. You may just be able to help shape tax rules and regulations in ways that contribute to your company's long-term success. So, what do you think about all this? How VAT changes could influence you or your business? Let us know in the comment section below. Make sure to like it, as now you know that your business's future depends on what you do today. Why not subscribe, as we will keep on bringing more great videos like this. Until next time, see ya!